Whew. All right, we are live. We are live. 2, 1. Okay, another episode of Things I Wish I Knew About Money. I'm your host, Kamille Smith. And oh, what a week it has been. It's a new month. It's March 5th. A lot has been going on this week. A lot has been going on this week. First of all, no matter what, I will always be here, whether rain or shine, whether things are going well or not going so well. So I have to just big up myself for being here, because today was a little rough. It's the month of March, I've noticed, is going to be a rough month for me. But I just got to push through and be able to, give you guys the financial literacy and all that good stuff. And it is episode 67. Holy smokes. And I wanted to do a little recap of last week's episode with the taxes, and thank everyone that listened on Anchor or Spotify and all that good stuff. I'm seeing some traction and stuff, so I was really excited. That means, you guys are prepared to do your taxes, but I haven't heard any phone calls or anything. So what is going on? Hopefully you guys are getting that checked. You do have a questionnaire and all that good stuff. And I think I feel like I rushed through certain things with the taxes. So I wanted to kind of go back, not to taxes, but back to like self-employed or entrepreneurs or business owners, because like I said, the other week, I did a presentation, and I finally remember the name. So it was for Ignite and Inspire, and I probably even mixed that up as well. But I managed to do, I was able to speak to entrepreneurs that want to, learn about their finances and stuff. And yes, Ignite and Inspire. So once again, I want to big them up. I was able to talk about common dilemmas that we may have as business owners or entrepreneurs, whether you're self-employed, a partnership, charity, and all that great stuff. So I wanted to do a recap, or not do a recap, but discuss more about that, because I've noticed in the last couple of years that a lot of people don't know what they're supposed to do when they get into a business. So I thought, since I am a business owner, entrepreneur, self-employed, and all that good stuff, I thought I would, give you guys some information that I've learned from doing people's taxes and doing people's books, so you'd be able to have an idea. So I'm not going to give you guys a presentation. but I'm going to give you the pinpoints of the presentation that I did the other day. All right. So I hope you guys are, make sure you guys like, subscribe, and all that good stuff, and share. Like anyone that is a new entrepreneur and they want to get their feet wet, you definitely want to listen to this. Okay. So we're going to start off like this. So when I was doing my research and also going based on the things I know, I found 16 common dilemmas that small businesses have. And y'all need to hear these. And I'm not going to explain them all, but I'm going to clarify some of them, the ones that I know the best. So the first one that I heard was, or read or found out, is reporting earnings from a business on your tax return. So if you're wondering what that means, there's going to be some people that they don't have a corporation, but they have a self-employed partnership or even a side hustle. So any of that money that you make in a side hustle, your self-employed, your partnership, it actually goes onto your personal tax return. Okay, so when you file your taxes by April 30th, you will know that you'll notice that there's a T2125 return where you explain how much money you've how much money you've made in your business and how much expenses you have gained or claimed, sorry. And the reason why you want to do this, so I'm gonna explain them each. The ones I know, I'm just gonna explain them straight on. So I know there's a lot of folks that love to have a side hustle and they don't want to talk about that cash, but guess what? If you always keep the money in your cash and you don't want to talk about that income, you can't claim all these expenses that you used for your business. So you might as well just bite the bullet and just claim those things. So whether it's whether you freelanced, whether you have a side hustle, however you want to talk about it, just claim them. Just talk about it. It doesn't hurt you in the long run if you show those business income and business expense, right? Another one is not keeping track of revenues and expenses. Let me just take a sip. My gosh. So when it comes to this, how do I say this in the nicest way? So there are times when individuals have ran a business and they're not aware of the money that they make or even the expenses they've expend in their business. And the reason why this is very crucial is because if you don't know where your money's going, whether you're putting enough money into like marketing, whether you're getting enough money in your sales, your business is gonna like be not a disaster, but if you know the saying, there's a saying that a business doesn't see profit until 3 years, right? And some businesses don't even survive within 5 years. So wouldn't you want to be one of those businesses that actually know where their money's going and all that great stuff? I would too. I would too. So please check that out and all that good stuff. Keep track of your revenue and expenses. And there are ways for you to check that. There are accounting programs. There are Excel. You can be a champ at Excel and all that good stuff. I'm not the best at Excel, but I hold my own. That's why I prefer using accounting programs. Not registering for sales taxes. Ladies and gentlemen, if you make over $30,000 in sales, with whatever you're doing, you have to register your GST or HST your GST or HST number. Fun fact, this applies for folks in the States too. I'm not sure about, the other countries that listen, but definitely if you're in the States, if you're making 30,000, you have to get your sales tax number as well. It goes the same way. So anyone that is making $30,000 in sales each year, especially each year, or no, once you've reached 30, boom, you have to have an HST number, okay? For the folks that haven't gotten there quite yet, don't worry, it takes time. But I also want to give a little advice. So let's say you finally get your HST number, and if you're in Ontario, it's HST. If it's like Alberta, it's only GST. So remember, you're selling someone $100 on something plus tax, which is $113. I would advise to always keep the HST, because you're always going to have to pay it back to the government. And then with the HST, you have a option whether you want to do it monthly, perhaps. I remember for sure quarterly and annually. I don't know about y'all. If you're really making some money, maybe a lump sum all at once is kind of a lot for you. So you probably would be better at doing it quarterly. So it takes off some stress from you, right? So another thing, so the fourth one is not having a separate account. I'm going to say, for the amount of people I've done bookkeeping for, it took 70%, I'm going to say 70% would mix their personal and business accounts together. Whether I was doing bookkeeping, whether I was doing someone's taxes and everything. And this is the one thing that you should know. If you decide to have a business, whether it's side hustle, regular business and all that stuff, just once you've registered your business, especially if you registered your business, just open up a business account. You can open up a business checking account. You can open up a business savings account. Some people can even get a business credit card. Please, 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 please. Having your personal and your business stuff mixed in together actually wastes time for you and the person that's going to be doing your taxes, or it's going to cost you more money, because now the person that's doing your taxes or the person that's doing your bookkeeping has to decipher whether if this item is personal or if it's business. And not even that, is imagine if you get audited and then the CRA or IRS wants to see your bank statements and your credit card statements. Credit card statements, it's iffy because you can highlight the ones that are business, but come on, do you really want to show CRA or IRS oh, so you went to the salon, or you went to LCBO, or you went to the groceries? Was this business related? No, leave it alone. So to get things easier, just separate it, please. Honestly, this has to be ding, 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 ding. The first one, as soon as you register a business, you have so many options. There is RBC, there is TD, there's CIBC, there is, I think, no, Simply doesn't have a business account as far as I remember, but they have a savings one. There's ING, or Tangerine, whichever you want to say it. There, BMO, like, you have so many options that you can choose to just open up a bank account for your business. And if you're actually being cheap, once again, when I went to tell you about tracking or reporting your earnings, you can claim for bank fees. So you can find one that's like $5. I have a business account that's $5 a month. That's not gonna break your pockets. It's not gonna break your pockets. Like, trust me. What else? Oh, not what else. Not understanding the difference between employee and self-employed. So, I mean, this one, don't really have to explain it too much, but you want to know whether you want to see whether it makes more sense having an employee or a contractor, subcontractor, I should say, because you can, I mean, there's two ways you can see it. You can pay for their CPP, EI, and taxes, or you can make them do that and take care of it themselves, and then you just worry about like paying them the flat rate, right? It's up to you. Whatever floats your boat and all that good stuff. But I would, depends how profitable your business is going, I would say, to whether you should have employees or subcontractors. I have a client that normally, as of late, they've done subcontractors because it just makes it easier for them. Yeah, and there's nothing wrong with that. Okay. Also, what's the other one? So number 6, not keeping copies of bills and receipts. This is another one, and I don't mean to sigh because, like I said, because I do bookkeeping, or the struggle is real sometimes. Thank you, Red Eye Solutions. I know I just came from what you call it? I came from a funeral. That's why I still have the hat on, and stay fresh in this. But anyways, so whoever's listening, obviously you just heard what I just said, but if you're watching, you know why I look so fly today. So when it comes to not keeping copies of your bills and receipts, okay, so first things first, you have to keep your records for at least 7 years, especially when it comes to like CRA or IRS. You got to keep records of your expenses and your income, right? So when I see that people don't like at least copy it, or they throw it away, it kind of irks me, but namaste. I'm gonna keep my cool. You should always, okay, there's so many ways that you can do it, okay? So there is your phone. There is a scanner, if your scanner works properly. Mine hasn't been working properly this year. What else? There is, okay, so there's Receipt Bank, or they call it Dex now. And there's also, I think there's another one. There are other apps. Duh, QuickBooks. I love QuickBooks. Okay, so before I would take a photo, scan, and save it on a drive or Google Drive, whatnot, have to save it again, and then send it to QuickBooks, right? Yo, what? I had QuickBooks, when QuickBooks Receipt came out, I was like a kid in the candy store. Like the same way how I look and I feel happy that's how happy I was. I was literally just taking photos of the receipt and it was going straight to QuickBooks and matching the transaction. That makes my life easy. That makes your life as a client easy. You don't have to worry about anything after. But I would still say store it away. I like having the physical copy, digital or electronic copy, and then you have it on the system, right? It just makes your life easier. What else? Not filing tax returns on time. Okay. So I've been there as well. No, not I. Well, technically speaking. Okay, so when I was away in Korea, I didn't do my taxes because I didn't see the point. But obviously, I wouldn't recommend that to you, ladies and gentlemen. However, when it comes to a business, because that was my personal, when it comes to a business, you should file your taxes on time because there are certain incentives that you'll receive. There's certain incentives that you'll receive and you won't get. Sometimes the CRA or the IRS will come after you. Like I've seen people have multiple returns done. It's only bad, especially if you owe something and stuff. What just happened? Interesting. Sorry, my computer did something. What's another one? Not paying installments. So I'm not sure about how it works in the States. However, in Canada, or Canada, I should say, once you owe at least $3,000, you have a way to pay it in installments, which is I think it's pretty nice because instead of paying a whole lump sum and you don't have the money, which that's going to be a next thing in a couple dilemmas. Who really wants to pay $2,000 at one time? And then especially if you don't have it, ooh, child. You don't want that type of situation, right? But if you have the installments, that's even better. And I believe the installments is December. I know there's one in December. I believe there's one in April, September. I believe it follows the same way as doing your quarterly HSTs. So be mindful about that. It also shows you when you get your notice of assessment when your installments are. And fun fact, it actually helps you in the long run because they will offset the installments that you've paid for the next year and stuff, right? So keep that in mind. Not upgrading to a proper accounting system. I mean, you could be old school and use paper or a ledger, or you can use Excel, which is more efficient because you'll be able to have formulas. If you know the formulas for Excel, you're good, you're grand and all that stuff. But I personally use QuickBooks for most of the programs for my clients. I use QuickBooks. There are different ones. There's Waves, there's FreshBooks, there is Coho. There is also, and I'm not even being sponsored for any of these folks. I just want to give you guys game, free game. There's another one. I said Waves, right? Waves, FreshBooks, Xero, and Sage. Yeah, those are the ones that are pretty popular, but I love QuickBooks, I'm not gonna lie. Another one is not replacing credit card debt with a line of credit. So that's a good one. I'm not going to go into hardcore. Obviously, we know when it comes to a credit card is normally 19%, 22%. I'm hoping you guys don't, or ladies and gentlemen, don't always keep a balance. But if you got a line of credit, it would be much, the interest would be less than the credit card debt, obviously. So make sure you have good credit and try to convert into that, right? Not saving enough to pay sales tax and income tax liabilities. So, but this also determines, or this is whether you're going to, one, have employees or subcontractors. But remember, you have to pay yourself too. So you have to decide whether you're going to be a subcontractor to your business or be self-employed as well. I'll discuss that a little bit later. And sales tax. Also, remember, if you're not making $30,000 and you're not having sales tax, you still have to pay sales tax. So no, you should, either way, you should save for taxes, or you should save for your taxes for the business. I would say it's either you save just that HST or you save 30%. So 70% of the money that you make is to invest back into the business, whether it's expenses, operating expenses, paying yourself or whatnot. The 30% is you're saving that for when the tax time comes. Or if you get like a proper tax person, you'll be able to find out the ways to, work through all that stuff. But I would say 30% for sure. What's the next one? Not reconciling business bank and credit card accounts. So, so when it comes to doing your tax return, having an audit done for your business so you'd be able to get funding for grants or anything, you have to reconcile your bank statements. So whether you have a bank account, whether you have a credit card, you have to reconcile those, because the tax accountant that look at your books, they're not going to do it unless you reconcile. So it's basically every month, whether you want to do it every month. Ideally, do it monthly so things don't get hectic, because there's going to be transactions that you don't remember, oh, why is it like that? So just do that monthly. Not calculating foreign exchange on relevant transactions. So if you noticed you buy something in the States, or you buy something in Europe, or you buy something in Asia, technically you're paying their taxes, right? And if you are getting your HST or GST done, you know that you can offset your expenses, especially with the HST or the GST. However, if it's a foreign transaction, whether it's USA, Europe, or Asia, you cannot claim their taxes. So you just have to put it as exempt or 0 rated. That's a different story. So you basically can't claim the taxes that you paid on those foreign stuff. So it's either you buy more stuff in your local country or enjoy the money that you spend outside and things outside the country. Not much to say there. Not seeking professional help from an accountant or lawyer. This is going to be another discussion, because I noticed that a lot of people get different professions incorrect. So you would see me and I say yeah, I'm a bookkeeper. I don't normally call myself an accountant. Like, same thing, you're accountant. I'm like, technically, no, because there are things that a tax accountant or a CPA or a CGA or CA will know more than I do when it comes to like bookkeeping, or even financial trainer, personal finance trainer. They're like, oh, so you can do all these things. I'm like, technically, I have to think a different way when it comes to that, but that's a different episode. I'll definitely bring on someone to talk about that, because I've heard that before. But when it comes to your business, you want to be able to have professional help, right? So especially if you're, okay, so example, if you're incorporating your business, which I'll be discussing in 2 seconds, you'll want a lawyer or an accountant. So that you'll be able to know the different aspects on how to do that, or what's the right ways, because you have to, when you get the corporation documents, you have to go to a lawyer, a paralegal, and all that stuff. So yes, does paying a lawyer or accountant cost more? Absolutely. But guess what? Like I said before, any expenses you have for your business, you can claim back. So yeah, okay, you're not gonna claim it 100%, but aren't you happy that you're getting something back from it? I don't know. I just, when it comes to buying stuff for my business, I don't really get upset or annoyed, because I'm like, I'm just operating costs. Like it's gonna help me in the long run. Yes, do you want to get the bang for your buck? But also you get what you pay for. So be mindful about that as well. 15 one is not choosing the best corporate structure. So that's a dilemma that some businesses make, and I find that very interesting. The reason why I find that interesting is, okay, and I'm not going to go hardcore in the American aspect because I don't remember them all. So for Canada, we have self-employed. Nope, sorry. We have sole proprietorship. We have partnership, and that's a non-corporated business, right? And then we have incorporated or charity. I'm not going to dive into the charity because I don't remember all the factors for them. But so a non-for-profit business, right? So you, depending on which business you have and depending on what you have. So there's, sole proprietorship, partnership, incorporated. So those are the 3 main ones that you can choose. So you want to be, why would you want to choose incorporated over sole proprietorship? Well, so example, Kamille Smith has a business, a sole proprietorship. So if anything was to happen, knock on wood, they are suing Kamille Smith. Even though she is Finance IQ Services, she's still Kamille Smith. That's sole proprietorship. And the same goes with like a partnership. So that it's going to your personal like taxes. That business income goes to your personal taxes, right? So, however, if Finance IQ was incorporated and something was to happen, so now Fitness IQ is a different identity or entity, sorry. And Kamille Smith is just the CEO founder of Fitness IQ, but those are 2 separate things. You see how I was talking about separate your personal and your business? So basically what happens is if anything was to happen to the business, they're not going after your personal assets and liabilities. So you want to be mindful with which business that you have. They're like, should I have a sole proprietorship or should I incorporate it? And with the Americans, the same thing with sole proprietorship, partnership. But I believe there's one, what is it called? S Corp. There's S Corp. I'm gonna look at it real quick. S Corp. I got the names. LLC. Okay, yes, that's what I always hear. I always hear LLC, and a lot of folks get those confused. Like here, like we don't have an LLC. We have, like I said, sole proprietorship, partnership, incorporated. But in the States, their LLC is a limited liability company, and it's a structured business entity that helps shield owners from from I was gonna struggle from like being, I don't know the word right now, guys, so I'm just not gonna say it, but it basically protects you. Just how I was saying with the business in Canada, it protects us, right? Y'all gonna make fun of me, it's okay. S Corp is a tax classification that provides, sorry, S Corporation is a tax classification that provides liability protection and passes income through to owners. So they're pretty different from here. So let's not get those mixed up, okay? Once again, with the States, you want to see which one would work ideal for you. However, like I go back to the Canadians here, remember, when you have a sole proprietorship or partnership, it is much easier and more cost efficient when it comes to a business. However, in my mind, when should you pick through whether it should be a sole proprietorship or corporation, is when you know that you're making a significant enough amount of money to be able to change into or in a corporation. And not even that, if you have a corporation and you want to have like many businesses under that corporation, like umbrella, you probably want to have like the main corporation and then offset. That is where you definitely need an accountant and a lawyer to discuss those things, because it only makes sense. Like let's be real. I don't know everything. You don't know everything. So it's better to have professionals with you to be able to maximize on saving money and time. Because at the end of the day, when it comes to a business, you want to save on time and money. That's the reason why you're in the business, right? Let's see, what else? Not properly, and this is the last one, not properly recording shareholder loan transactions. Let me tell you. When it comes to, remember what I said about not separating your personal and your business account? There, and maybe this is a mistake, perhaps this is a mistake that I make mostly, like all the other ones, I'm pretty solid with those. But there are certain transactions that you make in your business that you dang well know is not business related, right? So you're going to have to track those properly. Remember, and I think I mentioned this in the presentation, when it comes to a business or sole proprietorship, you can talk about or mention, but you can add or claim those contributions, those that startup funding that you've done into your business on your T4, not T4, sorry, the T2125. You can talk about the money that you contributed to your business, and you can also disclose the withdrawals that you do from the business. So sometimes people borrow money from their business and you had to talk about that, right? I think there's been a couple times where I'm like, is this the right thing? I think so. So, but also, like I said, you have to talk to a tax accountant, or I got to do more studying as well. And just be mindful of the things that you spend in your business. So say, I mean, you can invest when it comes to your business, but you want to also talk to someone about that. And you're like, oh, is this the right way? You can buy assets and all that good stuff towards your business. You don't want to buy, oh no, I was thinking of something that's actually happened. I'm trying to think of something else. Or you can't. And we're back. It's crazy because I was just about to end. Um, dang, I just want you guys to be mindful about what happens in a business, especially if you are new, and if you're more seasoned, I would say. Just make sure you get the proper help that you need for your business. If you're not sure about what you should do with your business, you should go to find a mentor at that business. Don't worry, you're not really competition. You're just trying to you're trying to figure out things about that business as well. Or pay a coach. Once again, it's expense that you can claim, and you might learn more about it. Seek mentorship. Uh, do more research in your industry, right? I would just say thank you for everyone listening and all that good stuff, and watching. Big up yourselves. And let's see. In the I don't know what's going on next week, but I just hope, there's a lot of things that are happening in the world, and try to stay positive as much as possible. If there's any way that you need to stay positive, is journal, exercise, read a book, do something positive, and all that good stuff. And once again, thank you folks for listening, for being here. Make sure you like, subscribe, and share it with a friend. Okay? And on that note, hold on a second. With the internet just messed up on me. So give me a minute. Give me not a minute. Give me a second. But yes, folks, much love. Till next week, we are here. Anyway, got all fake music. Anyway, job. Money literacy books. Fitness in our blood because we're working for your class. Money literacy books. Yeah, we're jumping on it. Money literacy books. Fitness in our blood because we're working for your class. Money literacy books. Yo, we're jumping on it.